I will explain how to pass on your overhead or your brokerage fee to your client. So think about it like this. If you work with an attorney or a CPA, when you get an invoice that shows how your retainer fee was spent, you'll see that the attorney passes on any costs that they incurred. So shipping is an example, or even copies. If an attorney's making copies, they're charging you 10 cents a copy. If they're sending something overnight, they're charging you $15 or $30. If there's a filing fee with the court, the attorney passes that on to you, and then what they charge in terms of their own efforts is separate. I mean, they combine it all together when they bill you, but if the attorney has a cost, they're going to pass it on to you. Now, unfortunately, real estate agents don't have that same sort of precedent in the industry where we can say, hey, I incurred these costs, therefore I'm passing them on to you, because that shouldn't come out of my commission, right? Unfortunately, it's not that way, but there's an exception. To an extent, it can be. And you can get a flat fee or a certain portion of your overhead reimbursed by your client. I think the best example would be either a transaction coordinator fee or at least a portion of what your broker charges. As an example, at Balboa Real Estate, we do a flat fee per transaction. In many cases, that flat fee is $500, regardless of the commission amount. But that's a fee that you, the licensee, will incur when you close a transaction. So let's say the commission you make is $15,000. Well, your check's going to be $14,500 because there's a $500 brokerage fee. But you can even offset that, and this is what I'm going to show you in this video. So let's look at a listing agreement, and then we'll move over to a purchase agreement. In a listing agreement, what you can do is put in whatever you're charging. I put in 5% here. It's just kind of the standard that you'll typically see. And then there's an and. So in addition to whatever percentage you're charging your seller here, you can put in a fee. Now, I have as an example $495 as a broker administrative fee. Now, if the brokerage fee was $500, since we're collecting this as well, really that just reduces it down to a simple $5. And you could even make this $500, or you could make it $250. The point is, whatever you charge your client here is going to offset what you owe the brokerage. So we have just, and I put broker administrative fee now, or administration fee. You can rename this whatever suits the way you conduct business. You can call this an administrative fee, a processing fee, a transaction coordinator fee, whatever you want to call it that you think is professional and more easily digestible to your client. Feel welcome to do that. But when you put this in here, it offsets how much you owe the brokerage. And it shouldn't have any effect on the commission. Now keep in mind, a listing agreement is where the listing brokerage charges the seller. And I'll explain how this ties into the purchase agreement later. But this is basically where the seller is charged. Now, where that transaction finishes is at escrow. And escrow, look at escrow like the cashier in a transaction. So this is your invoice, and you need to deliver it to escrow, which is the cashier, to make sure that these fees are accounted for. Let's jump over to a purchase agreement. Let's say you're writing an offer. All right, here we're at the top of a purchase agreement. I'm going to scroll down to the section that applies. All right, so we have all these other forms. Okay, now here we're at the first page. Scrolling through the second page. Now on the third page, this is the section that allocates closing costs. There are a couple auxiliary lines. These are blank lines that you can put in whatever information you want. This is, I think, paragraph 7, section D. I put two different lines in here. Now, you don't want to put two lines when you're really doing this. I just filled in both lines as an example so you can see it written two different ways. You'll check a box here. So let's say you're representing your client, because now we're writing an offer for our buyer. Before, with the listing agreement, we were writing a listing agreement for the seller. So let's say we want to charge our buyer a fee to offset our overhead, our cost. We check the box buyer and we write in, the buyer shall pay for, And now, again, you can change this verbiage however you see fit. I just wrote $4.95 processing fee to Balboa Real Estate. That again is going to come to the brokerage, and it's going to reduce how much we charge you as a brokerage so you could keep the rest of the commission. It offsets your cost. If your flat fee is $500 and we get $495, then we tell you, well, $495 has been prepaid, you just owe us $5. The rest of the commission you can keep. Make it $500, now there's a break even. You keep the entire commission. Let's say it's 2.5%, you literally get the entire 2.5%. Now, let's say you just want to pass on the cost of a transaction coordinator. And quite frankly, this $495, I probably should have put at the end of this line, but it doesn't really matter. The point is you want to have a numerical figure and you want to have an explanation and payable to whom. Because again, this document is going to go, so the allocation of closing costs, this is where each party is assuming the obligation of paying certain closing costs. And on lines D8, 9, I'm showing you that these are blank and you can just assign a new obligation to whichever party for a certain amount payable to a certain party. And then you give this to escrow, the cashier, and make sure escrow charges the client. So you could say, buyer shall pay for, and you could write transaction coordinator to Balboa Real Estate of $495. Again, as long as you have these components of how much, what for, and payable to whom, fill it in there, whatever you want, in terms that will be acceptable to your client. And then when you deliver this to escrow, make sure that they're charged. And this, again, is going to create a new fee that goes to the broker, and the broker is going to be able to say, all right, well, this portion of how much you owe, and again, Balboa is a flat fee per transaction brokerage, so we just do easy math. We charge you $500 or $600 or whatever the flat fee is, and we deduct whatever you charged here. If you want to have your transaction coordinator paid for, then you can put your transaction coordinator fee here, have your client pay for it, and then it cancels out. Because really, I mean, from the perspective of an attorney or a CPA, or even, I mean, just look at your cell phone bill. When they have some sort of regulatory fee, they're not paying it out of your service. They're not charging you $100 a month for your cell phone service and saying, oh, well, we got to deduct all these fees. You know, there's a regulatory fee and a 911 emergency fund and all these things. They're saying, no, we charge you $100 a month. Now, there are all these other fees that we incur as operating as a cell phone carrier, and we're going to pass it on to you. That's why your cell phone bill ends in that odd number where they've tacked on the fees. Many businesses, especially service businesses from professional services like an attorney, if they incur a fee, a court filing, parking when they go to court, I mean, you name it, it's going to show up on deductions from your retainer. So we can't necessarily capture it the same way, unfortunately, but we can come close with offsetting our overhead by putting some sort of fee in the listing agreement or the purchase agreement. If you have any questions, email info@balboateam.com. Actually, even better, ask them in the comment section below, and I'll be happy to answer them publicly. I do hope that you found this informative. Thanks for watching.